hello. This is the Audit Committee of New York State EFC. I'll ask Kate to do a roll call, see if we have quorum.
Certainly. Director DeMarquis?
Present.
Director Corcoran?
Present.
Director Zarofsky?
I'm here.
And we have our Chair, Krasansky, so we have the complete committee.
Got a quorum. Great. We have draft minutes from April 5th, 2023 of the last meeting we had. And if people have reviewed it, and looking for a motion to approve it if we agree or if we want to discuss any changes.
So moved.
Second.
Great. All in favor?
Aye.
Aye. Any opposed? No. Great. Approve the minutes. Thank you. The charter, every year we look at the charter. I've looked at, we've made recommending no changes to the audit committee charter from last year. If anybody wants to discuss any proposed changes, now's the time. Otherwise, I'll take a motion to approve the charter for another year.
I'll make the motion.
And second.
Great. All in favor?
Aye.
Charter.
Aye.
Opposed? Nobody. Great. Got the charter in place for another year. We have a presentation by our independent auditors, KPMG, Jeff Koch and Jeff Mabb, and we'd love to hear what you've been working on and how it's gone. And I turn it over to you.
Very good. Well, thank you. Good afternoon or good morning, everybody, I guess still. We're happy to be here in person, feeling like getting back to normal with some of these meetings. We've been working on the audit of the basic financial statements of the corporation here for the last few months. And a couple of things we provided was a copy of those drafts for everyone to review, as well as our presentation. We'll be mostly working out of the presentation that we have that will be shared up here shortly. But related to the basic financial statements, a couple of highlights just to recall from our previous conversations is this year, the corporation adopted GASB 87 related to leases. And that was the bringing on for all your operating lease asset, a lease liability, founded in the basic principles by GASB that those are really financing of right to use assets and should be presented from a comparability standpoint of all organizations. In electing to do that, GASB does not give you the ability to say, hey, we're going to do it similar to what FASB may do, which is you would present it for the most recent year, even if you presented prior year financial information. You would have to restate your prior year financials for those leases, evaluating them back to the beginning of time. However, FASB does give you the ability to do 1 year presentations, which was determined to be done this year. So the financial statements this year are only for the 1 year. And that allowed management to evaluate those leases for just the current period as opposed to going back in time from that standpoint. It does give you, GASB does give you the ability in the future, if elected, to go back to a 2 year presentation, or you could stay a 1 year presentation. Entities do vary with which route they go related to that. The benefit under GASB when you're in that 1 year presentation is that your MD&A does provide a lot of that comparative information that you have from a historical standpoint and allows you to have that insight of what changes on a year by year basis as far as those go. So with that, I'm going to turn into the presentation. Hopefully everyone's got a copy as we try to have some technical difficulties right now. I'm going to be on slide 3, which is just the overview of the engagement to date. And as I noted, we performed our audit of the corporation financial statements for March 31, 2023. We will be providing several deliverables associated to that. We'll be providing the independent auditor's report on the basic financial statements. We'll also be providing our independent report on the internal controls of the financial statements, which is commonly referred to as the Yellow Book report in government auditing standards.
And Jeff, I'm so sorry to interrupt, but I just wanted to see if, Jeff, if you're able to share.
I am working on screen.
Almost there. You can have the visual. So sorry.
All right, there we go.
Wonderful.
The other deliverable that we'll be having is the report on the investment compliance, section 2013 of Title II of the official compilation of codes, rules, regulations of the state of New York. We are presenting today our report to the audit committee on the various matters required to be communicated in accordance with AUC 260 As far as open and pending matters, we are, basically in our wrap down phase of the audit. There are a few small items that we're working through, nothing that we think will impact the overall status of what we're presenting today. And then we do also have in the future the report that we'll issue related to the single audit, which we do a little bit down the road that's due by the corporation. Moving on to the next slide, related to the audit report, as of June 22nd, we expect to issue an unmodified opinion. That's the clean opinion that gets issued on all financial statements. Consistent with prior years, there'll be 2 other paragraphs associated with that are required under GASB standards. That's a paragraph on your required supplementary information, as well as the paragraph on your other matters. And both of those are typically considered what are called in relation to opinions, which basically say we perform procedures in accordance with government general accepted auditing standards and didn't have any sort of issues related to that. Related to the corporation, the significant accounting policies that the corporation follows are found in Note 2. We've already talked about that this year. The corporation adopted GASB 87. You won't notice any significant changes to these statements because while they adopted the standard, the evaluation performed, the standard gives the ability for these short-term leases that have 12 months or left to be excluded. Additionally, there was already a little bit of a liability associated to the lease on the corporation books. So ultimately, there was no changes per se for this year.
However, let me ask you about the lease. You talk about leases. Some examples. Sort of tell us about how this applies to us.
So our building lease.
Yeah.
That's the big one. So
That's
we
it.
pay about $500,000 a year in rent expense that will now need to classified as a liability.
There's no other lease.
No. Next year, I think we'll adopt the GASB 96 for the technology subscription agreements. That's a similar accounting treatment, and we're going to have to dig into that. I have a suspicion that there's going to be a lot more.
Like those.
Yeah.
Great.
Okay. Moving on to the next slide. These are the other required communication matters as it relates to any audit misstatements, corrected or uncorrected. We have no matters to report. Related to any significant deficiencies or material weaknesses throughout our audit procedures, we did not identify any significant deficiencies or material weaknesses. And as referred to before, the yellow report will indicate that. There were no significant or unusual transactions encountered as part of this current year audit. Related to non-GAAP, a lot of organizations sometimes will adopt non-GAAP policies such as capitalization of capital assets and things of that, not that they apply here, but we do consider if there were any for the organization, they did not have any matters to report associated to that. For subsequent events, there are no unusual subsequent events, I will say. There typically are bond offerings that happen after year end. I think there was one recently in May that occurred. Those do get disclosed in your financial statements, but again, those are not considered unusual as far as that goes. Moving down a little more, related to our financial presentation disclosure omissions, there's nothing significant identified through our procedures. We did not identify any matters associated with going concerns. And move on to the next page. There were no illegal acts or frauds identified as part of our audit procedures. Additionally, related to the financial statement audits, we did not identify any matters of non-compliance with laws or regulations. We will continue to evaluate that as we go forward doing your single audit procedures as well, and we'll report if there's any matters there. Happy to report there were no significant difficulties encountered during our audits. We have no disagreement with management. There were no significant findings or issues that resulted in correspondence outside of the audit. The last bullet here is just our requirement to communicate that we are independent in accordance with the professional standards as we issue this audit report. Moving on to the next slide, it's just our considerations of management override of controls. This is what we consider a significant risk in our audit. This is not saying it's unique to the corporation. This is available in a lot of organizations, just with the unique position that management it is to present the financial statements and potentially override controls. We do perform a variety of controls, such as analyzing the process management has associated to reporting journal entries throughout the year, obtaining complete populations, and identifying any entries that may be subject to management bias or have a higher risk criteria as we kind of go through those procedures. Happy to report, we did not identify any issues or concerns associated with that process. With that, I'll turn it over to Jeff Mapp, who will take us through the summary of procedures performed.
Thanks, Jeff. So similar to what was presented in the plan, some of the higher level items that go over here. So cash and investments, confirm all cash accounts in all investment accounts. We also independently price all investments. We also test investments on a sample basis for compliance as part of our compliance procedures for that compliance report that we issue. We agree transactions to the bank statements, and then evaluate obviously the reasonableness of disclosures as well on the financial statements, and no issues there. Bond receivable and interest income, another area where we do a lot of confirmations, this one on a more sample basis. We also vouch any new financing arrangements, obtain any significant account reconciliations, and then we test interest income through a substantive analytical procedure. Again, no issues with that area as well. Bonds payable, similar to the receivable side. Again, confirm bonds payable with the trustee on a sample basis. Any significant account reconciliations we obtain and review, assess any bond offerings, and then again on the interest expense side, another substantive analytical procedure, and no issues to report there as well. And then for OPEB, we get the GASB 75 report from the actuary. We review that. We also have our own internal actuary look at to assess the methodology and assumptions that's used by management, and we didn't identify any issues there as well.
What's the number? I don't see the number. Is there a number there, or the OPEG, just the overall?
I think our overall liability is at about 38 million, which is down somewhat significantly from prior year.
Yeah, okay. It's gone up and down.
Yeah, and that's again an actuarial valuation.
Exactly,
which
totally right. We get it.
Long-term projection, trying to project.
I know how long we're going to live and die. Okay, thanks, Kate.
So financial reporting, so we're reviewing financial statements, reviewing the financial statements, and also the disclosures, making sure they're all up to speed, and include everything required by GASB. That's material. No issues to report there. Contingencies, we conduct interviews with management. We send out confirmations to external counsel and talk to internal counsel. We also review other information such as board minutes, and no contingencies that were identified that would need to be disclosed. GASB has 87 we already covered. Again, more so on a completeness side, which is, as mentioned, really only one lease. So we didn't identify any other leases that should be reported. And so no issues to identify it in that area. And then subsequent events, again, we also covered that. No issues to report there. New and emerging accounting pronouncements, again, most of the ones, the three that here in 2024 coming up, don't anticipate major impacts. We will obviously review 96 might be the biggest, which is the SBITA, which is similar to the leases like we discussed. So that's the one that's really on the radar coming down the pipeline.
Tell us about that. Similar leases. It's about leases. Or?
Leases of technology.
Oh, I see.
Anything that's software as a service or platform as a service, you're hiring a third party to provide something for you. Think of a lot of cloud-based computing technologies.
Sure, got it.
So the idea is, again, you have a financing arrangement to their systems. They're trying to bring that same type of asset and liability on your books.
Okay, great.
Covers everything.
Covers everything we have. The appendix is just the typical responsibilities of management, the audit committee, and the auditors. Nothing new or significant change there. And then there's just another slide in here about just our audit and how we use a tool called KPMG Claire. I think Marty talked about that in years past, but there's information if anyone's curious about how that works from how the audit and data align all together as part of our audit. So that prepares our prepared remarks. If there's any questions, we're happy to take them.
Any questions? Already asked the two, but anybody else have any questions?
No, Charlie, great.
Oh, I was going to ask if you were back. Oh, I'm sorry. If you were back in the office for some of the audits this year.
Yeah.
We've been mostly down the street at our office. However, when the need would arise, we would offer to come on down and review information. A lot of information is turned a little more electronic, which is easier to provide electronically to us. However, for things such as if there were HR records to review that you didn't want to share, we're happy to come on down the street. We're kind of finding it more of a hybrid. Space is a premium in a lot of places.
Yep.
And so having auditors sit there for 5 straight weeks
Yeah.
is a little challenging. But we are definitely being available to be more on site for a lot of meetings or other matters.
And a lot of the electronic data feeds right into your new system that was explained to us before.
Yeah, so we have this tool that we call the KPMG Clara for Client we're talking about that the finance folks can upload to the share site, and we are able to even drop that into our tool as needed or just review it through that system as well too. And then whatever information is there on the completion of the audit, we're able to flush that information out so it doesn't get retained from that standpoint.
And obviously, transfer is under a secure mechanism, so.
Yes, I
Yeah,
think
I'm just stating the obvious.
absolutely.
Okay.
I've got a dumb question.
Never.
Bank failures, FDIC, the money that the EFC has, whose name is there any money in the EFC's name that, let's say, is at again, we use big banks, et cetera, but I guess I'm wondering, people are going through, sort of jumping through a lot of hoops to distribute assets. So it's not just in one place, trying to get on those limits. Are we subject, the FDIC limit? Is there any scenario where any funds in EFC's name could be not covered, let's say, with a bank failure?
Yeah, not from what we saw as part of our procedures. We do look at the banks and we do consider that as part of it. I believe, you have disclosures as well in your financial statements about those credit limits.
Right.
But from a standpoint of where we looked at it, we looked at what banks you are established
Right.
with.
And
obviously much larger banks,
Right.
these banks that had those failures. So we didn't identify any concerns.
Right. I think you approach it with, these banks are the last ones that would ever fail.
Yep.
Okay. It's one way to approach it. Another one would be to basically look for ways to protect yourself from having a concentration of assets.
Yeah.
We did look at this.
You did.
Brian can speak to collateralization on our accounts.
And, we have a substantial amount of money invested.
Right.
Most of it is at M&T.
Right.
Typically, that money is invested in treasuries and some money markets. However, all the money markets and everything is collateralized.
Yeah.
The treasuries, you're holding the direct
Mhm, right.
certificate, and
Right.
the money markets are collateralized.
Got it.
So we have been looking at this to for the same reason.
You never know.
Yeah.
Yeah.
Exactly. There you go.
And our corporate bank, Key Bank, is a collateralized account.
Got it.
So we're covered.
Beautiful. Good. Thank you. Good. Great answer. Anything, Francis and Adam? These are two finance experts.
No, but that was a good question, Charlie, and that good answers.
Yeah, experts enough to know that those are good answers.
Back in the audit committee, we've had a conversation with the KPMG auditors. Excellent conversation, very positive, and just very reassuring as well. And just really appreciate the, everything, all the answers. And so we are going to just take approve the audit. I recommend to the full board that we accept and approve the auditor's report and the financial statements of the corporation. That's our next step. And again, we've discussed it a lot. And if anybody wants to discuss it more, great. They're here to talk about their work. Or I'll take a motion to approve.
I'd make a motion to approve.
And second,
Great. All in favor of approving their audit for the year? Aye.
Well, I was just going to say in discussion, Charlie, that we did spend a lot of quality time asking a lot of good questions and got a lot of great answers from the auditors. So appreciate you doing all that and the auditors as well.
Yeah.
that's a great point, Francis. Thank you. Yeah, thank you, guys. That was a good conversation.
Yeah, very positive. So, okay, great. All in favor of approving the audit? Aye.
Aye.
Opposed? Nobody opposed? Great. Thank you so much, Jeff and Jeff. Did you both go by Jeff?
Yeah, confusing in the office.
Okay, great. So that's easy. So we appreciate Jeff and Jeff. Okay, got it. Great. All the nicknames. I love it. Appreciate you coming and your work. Obviously, we'll be in touch. And so do I have to read the statement here? Oh, the lead, do we talk the lead
Yes,
partner
yeah.
with them out?
Yeah.
We talk about the lead partner?
You can stay in if, unless you want.
Okay, so we talk about the lead partner. We rotate the lead partner. Marty Dunbar, of course, did it for, seems like forever. I shouldn't say that, but it's probably 5 years. And so at this point, in accordance with Public Authorities Law 2802 and the policy guidance of the Authority Budget Office, the lead partner on the audit or the partner responsible for reviewing the audit must be changed every 5 years. Marty Dunbar completed his 5-year rotation March 31, 2023. Jeff Koch is now lead partner. Therefore, the rotation of the lead partner is not required at this time. So we've taken care of that. Great, thank you. We also are going to discuss, 2 seconds, every year we talk about having an internal auditor here. You know, we've talked about that internal audit function from time to time. We've debated it seriously over the years. And if anybody feels like we should talk about it, let me know. I'm happy to discuss that if somebody thinks that we should talk about having an internal audit function at EFC at this point. We don't have it now, but we need to just decide, should we or should we not?
Well, I appreciate that we get to discuss it and
Yep.
think about it every year. And, given the report, given our sessions and discussions, I'm very comfortable that we don't need to move to that step.
No, I share that sentiment, Vita. I would only just throw out that as the new CFO comes on and gets a sense of the organization, obviously happy to revisit or get her perspective on that question going forward. But for now, I certainly agree with you, Vita.
I'll sort of add to that. It's a great time to just really, take a sort of a timeout, and see how things go. And obviously we're open to it at any time, but it's just good to know that we can always decide to do that and anything else that we need to do. But great. No, I'm fine with that. So I'll take a motion that I'll make a motion. Well, look for a motion that we've discussed it and we don't see a need for that at that point. Maybe Vita make the motion that we've talked about we've considered the internal audit function, that we don't need to go in that direction.
Sure. I'll make a motion that the corporation does not need an internal control auditor function at this time.
Great. Second?
I'll second that.
Beautiful. Thank you. All in favor of that motion?
Well, just hold on. Sorry, just before we go there, I'm not sure I agree with the framing of it, not need, but believe that we are comfortable without that at this time.
That's right.
Pending just to make sure we're clear, pending, future discussions. Right? We all are
Comfortable. Perfect.
Yeah.
Great.
We're comfortable where the
Thank you very
corporation
much.
is now based upon our conversations with the auditors and our own review, but always open to the,
Yep.
if needed, the conversation.
Perfect. Love it. All in favor of that? Aye.
Good luck with that. Okay.
Great. All opposed to that? Nobody opposed. Great. That passes. Perfect. Great. So unless there's other things to discuss, I'll look for a motion to adjourn the audit committee.
I'll make a
So
motion to adjourn.
Great. There's a second. Thank you. Great. We're adjourned.